In today's video, we're going to be discussing whether you should anchor your Yieldmax portfolio to SPYI, JEPI, or Cornerstone, CLM. This could be a Yieldmax portfolio or any other high-yielding portfolio that sees volatility, okay? So we want to anchor our high-yielding dividends to something stable, okay? So we earn over $100,000 per year in dividends at this channel. And my performance and value shows that we're up 33% for the year, 33%. The SP is up 13, the Dow is up 4, and the Nasdaq's up 27%. So we were up 50% just a week ago. Okay, now we're up only 33%. We're still beating all the indexes though, so that's nice. And yes, we had a pullback in one of our largest holdings, Cornerstone. This is what I anchor my portfolio with to live financially free out of my brokerage account with. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. So Cornerstone has had its pullback recently, and as you know, everyone knows why I'm in Cornerstone. It's a 4-star fund, as you can see here on Morningstar. 4-star fund, 21% dividend, and it beats the indexes, as you can see on the chart below. So that's why I anchor my portfolio to Cornerstone, okay? You just have to learn how to play Cornerstone, like I always say. You have to time it around its rights offerings because, again, it pays you a 21% dividend. This helps you live financially free, okay? Pays your bills. Even when the market's going sideways to down, like in 2022, I still survived and was able to live financially free. Plus, Cornerstone gives you this drip here for all you newcomers at the channel. Okay, the market price is $7, as you can see here, $7, but they take the 21% dividend and drip it down here at NAV. So 652, you get a, what is that, 17% gain at 663. Okay, 652, 19% gain. 642, 21%. 627, 24% gain here. So you get these drip gains every month. 21% dividend in Cornerstone drip down at the NAV each month for extra thousands of dollars in gains. Plus you get days gains potential, which as you can see, Cornerstone was up 17 on Friday. Its sister fund was down 1,200, so we're only up 500 net for that day, as you can see here. But typically Cornerstone is almost bulletproof in a bull market. It goes up and it has typically 30% premiums to NAV each year. Some years you see 50% premiums to NAV. So it's going to be really hard to make an argument against anchoring your portfolio with Cornerstone, but I would love to see you try. Please leave those comments in the section below if you can. So Cornerstone, you have to learn how to play this fund right. You have to time it around its rights offerings, and you have to ask for that special drip. But as we know already, if you're a follower of this channel, we alert you of the rights offering in our Discord chat room. So many closed-end funds have rights offerings every year that drop the stock's price. And so here is nothing different. We are in a closed-end fund, Cornerstone, that has a rights offering every year. And this is the channel that we alert you of when the rights offering occurs. We do it on the Cornerstone RO section. We also have a drip section here for who does the best drips for Cornerstone, who allows the the special drip to be had, okay, for Cornerstone, because not all brokers allow it. We also have many other channels on Discord that are all free, okay, when you purchase my e-guides. So when you purchase my e-guides on how to play Cornerstone or how to use margin to get ahead in your account, you get free access to all of my Discord channels, plus you get my phone number to call me anytime you need me, okay? So I'll sit there and walk you through your account and set your portfolio up just like mine if you need me to. I'm here day and night. Call me anytime. So Cornerstone, again, that's why I anchor my portfolio, my high-yielding passive income portfolio to Cornerstone. Now let's explore SPYI and JEPI, because a lot of people are seeing the volatility in their Yieldmax funds or just simply any high yielding income plays that they have in their portfolio. They're seeing the volatility in this recent drawdown in the market, and they're trying to anchor their portfolios as well. And I'm seeing a lot of people want to go to SPYI or JEPI, and I own both. See, I own JEPI here. I own about 5K, and I also own, I'm about to add, I own SPY here, 3,000, and I'm about to buy 2,000 more on Monday to get that up to 5. All right, now the question is, should I anchor my portfolio with SPYI or JEPI instead of Cornerstone, okay? Now, let's just explore this, okay? I'll share with you why, first of all, I don't anchor it with SPYI. SPYI has been doing just fine. It's a brand new fund. We already covered SPYI in a previous video if you want to learn how SPYI works. But as you can see here on the Morningstar test, year to date, it's made you about 2,000, from 10,000 to 12,000. Okay, it's made you about 2,000 SPYI. And JEPI, if we go over here to JEPI, you'll see a similar thing. It's made you about, it looks like about $2,000 to $3,000 since the start of the year, whereas Cornerstone has made you about, it looks like $6,000 to $9,000, 37 to 46 ish. Okay, so either way, I don't, let's not split hairs on the exact numbers there, but it looks like Cornerstone's outperforming on a year-to-date basis there, just by looking at those numbers. But here's another reason why I can't go into SPYI heavily, guys. Are you ready for it? Okay. Because of maintenance. As you know, I live financially free out of my brokerage account, okay, using the power of margin, all right? And I just use a fraction of that margin. And even when you're not using margin, you have to be aware of this maintenance requirement, 50%. Because if you put in 100,000 in SPYI, then according to this maintenance, then 50,000 of your equity will be taken up, okay? JEPI, okay, well, SPYI, 50% maintenance, okay, JEPI is 30%. And so that's a little bit more helpful as we go here to JEPI. Well, first let me show you Cornerstone. Cornerstone, this is why I anchor it, okay, because look at the maintenance for Cornerstone, okay? It is 30%, okay, 30%. And JEPI is too. Now, we'll talk about JEPI in 1 second, but if you need help understanding maintenance and the power of maintenance and how it unlocks more equity out of your account to live financially free, email me for my margin e-guide at akintodd48@gmail.com. See, this 100,000, well, if we put 100,000 into SPYI, 50,000 of our available withdrawal would be taken up, okay? Whereas if we put 100,000 into Cornerstone, only 30,000 of our equity is taken up. That's the key to living financially free. Your net account value is almost meaningless. It's just an egotistical number. Yes, I was at 500,000 a month ago or a week ago, but I don't care, okay? Some people are like, oh, well, you lost 60,000 in a week. You need to have timed the market better. There is no market timing. You don't time the market. You only rebalance at the highs or hedge at the highs. You don't sell out at the highs. Okay, so I'm not going to sell Cornerstone at the highs, just to rebalance my portfolio and lose all that precious qualifying income to banks. I can't have a gap in my payment history to the banks because that's how I live financially free. It's like a pay stub for me, these dividends. Just like a job, you can't have interruptions in your pay stubs, or it's harder to work with banks to level up your accounts or to get a house or live financially free without a 9 to 5. So Cornerstone, I'm not going to just sell my dividends, okay, and lose that qualifying income aspect. I'm also not going to sell because, again, you cannot time the market. You have to stay invested. So all I did was box Cornerstone or short some of it at the highs, which worked out really well. Okay, I have this short position down here, which we were down 1,000 in each short, and I was up briefly when Cornerstone was falling last week, but now we're in the negative again. That's fine. I'm happy to be negative on my shorts in Cornerstone, 20,000 short, because I have 500,000 long. So however we go up in the market and with Cornerstone, that short's going to be a meaningless hit to my market value. Okay, I'm going to lose basically nothing on those shorts. But if Cornerstone were to go to zero, I would have everything to gain off of those shorts. And I don't think Cornerstone's going to zero. I just hedge all of my positions, whether it be Yieldmax, Cornerstone, even JEPI and SPYI. Well, SPYI, I don't have enough in them to hedge them, and I'm not putting more in SPYI, as you know, because of the high maintenance. Also, SPYI is relatively new. It's not established. Its fund managers had some issues with the past funds they managed in their past, and so I have issues with going all in on SPY for that reason too, not just because of the maintenance, all right? And as you can see, again, I showed you the charts here. SPY and JEPI didn't really make you a whole lot. Now, if we go to a chart of JEPI, you'll see that it's been holding up relatively well, okay? It goes up a little bit left to right, but it decays, okay? And it doesn't have the premiums that Cornerstone has. And I don't think it moves up as well as SPYI either. As you can see by this chart here, okay? It's been relatively muted. The performance has been flat to sideways. But if you go to an SPYI chart, you'll see that it's had a little bit better upward left to right movement on its chart. Now that's what you need in this in your brokerage account. You need this upward left to right movement here. Plus it has a bigger dividend, 12%. So if I had a choice between SPYI and JEPI, I would choose SPYI because it has a bigger dividend and moves upward left to right, which is really important with these dividend funds that tend to decay and go sideways to down over time, okay? So you have to have upward left to right moving names to help get more performance out of your account. Okay. And SPYI accomplishes that more than JEPI. It's just that SPYI has 50% maintenance. That's at E-Trade. You want to check with your own broker. But if you're in all Yieldmax funds, for example, Yieldmax, Appley, Tesla, like many people that I know are, some brokerages have those at 100% maintenance. So if you're trying to anchor your portfolio with SPYI, and rightfully so because you're seeing volatility in Yieldmax, you want to anchor it with something more stable like SPYI, well, you're going into another 50% maintenance name, which is going to suck up more of this equity. If this number gets to zero, you're on a margin call. So I'm always comfortably well away from a margin call, okay? You'd have to have a 30% drop in a year to get me at a break even to a margin call. In other words, you'd have to drop 30% for me to be at a margin call. But if we have, let's say, a 20% drop in the market, like I always say, well, then 20% dividends and Cornerstone break you even. So I don't care if we have a 20% drop in the market or a 30% drop. I'm only going to be down net 10% for the year. Okay, so that's not going to even budge this available withdrawal. I'm going to have plenty of cushion to live financially free out of my account with on a 20 or 30% drawdown. And if the 20 or 30%, because of our dividends, and if the 20 to 30% drawdown happens in a month, well, then I have SPY put options on, okay? Now I need to rebalance these put options, okay, because I had them out for August and now I'm going to reset them for September. And I've already bought some September put options and taken them for a profit in the recent downturn in the market. But I'm going to put them back on just to have my house insurance. I'm not necessarily bearish on the market anymore. We've had our decent pullback, but I'm still keeping insurance on always because you never know, okay? It's just like a house. You want to always have insurance on from a flood or any kind of disaster. And I also have a section on insurance and hedging in my Margin E-Guide if you're interested. So, okay, so anchoring your portfolio with high beta, high yielding income names. What do you think it should be with? SPYI, JEPI, or Cornerstone? Cornerstone makes you more money than SPYI or JEPI. It has lower maintenance than SPYI, and it blows away JEPI on its performance metrics, as you can see on Morningstar. So, I mean, Cornerstone's really a no-brainer, guys. It is the index. It is the S&P and NASDAQ. CRF is the NASDAQ. CLM is the S&P. 21% dividend drips down at NAV. 30% premiums it averages per year. 30% premiums plus the 20% dividend. That's a 50% gain that you can potentially get each year, even without the drips, as I laid out in my last video. The drips just help you dollar cost average and buy low when the market's low, and it does its dollar cost averaging for you by dripping. So, and normally Cornerstone is bulletproof. It is our anchor. Normally when the market's going down, this thing is held up really well if you saw its past chart. But when Apple pulled back, so did Cornerstone, in my opinion. Okay, when Apple finally had its breakdown, Cornerstone finally had its breakdown. Because if you look at a chart of Cornerstone really quickly, you'll see that it just kind of has been going sideways to up this year, and it has been trickling higher, okay? Kind of like an apple. See how it's just been trickling higher from June to August, just steady incline, just like Apple. And then Apple had its drop, and so this looks pretty similar to Apple because Apple's a large holding of Cornerstone. So to me, I want to anchor my portfolio with Cornerstone and with Apple. That's why I have Appley, because Appley is one of the largest holdings within the indexes. Okay, and people are like, well, if you already have Apple exposure in Cornerstone, why are you getting more Appley exposure? Because I want as much index exposure as possible. I mean, I'll double it up, triple it up, quadruple it up. I just want index performance. Why? Because I don't care if the market goes down. I just want to have my dividends pay me no matter what. These dividends of $100,000 per year, I just want them coming uninterrupted. All right, so if I'm tied to the indexes, then we just fall by the index amount, and the dividends are insured to me. If we are in all Yieldmax names and crazy names and certain real estate funds that have high dividends like Armor or any of these other like Zim Shipping, okay, if you try to put a lot of your income into those names, you're going to be seeing a lot of anxiety as your portfolio has wild swings. Okay, I can't tie my investments to indexes. I cannot tie my portfolio to investments such as Zim or these other real estate holdings. I have to have it in steady index names, okay? Because I just fall by the level of the index. If you're in Zim or you're in Armor Residential or any of these other high yielding real estate names or whatever you want to think of, they fall more than the market or don't go up with the market. So when the market does fall, they'll fall back with the market, and you never gain enough equity from your performance side. You need both dividends and performance. So Cornerstone gives you that performance. JEPI does give you some performance, and SPYI does give you some performance too. But again, SPYI is high maintenance. How are you going to get around this argument with me, guys? SPYI is high maintenance, and JEPI, it's lower maintenance, but it's half the yield of Cornerstone, okay? Plus that yield has not been steady in JEPI. Sometimes that dividend falls, whereas Cornerstone's dividend is set for the year. All right, so I've made you many arguments as to why I anchor my portfolio with Cornerstone. If you can help articulate your arguments to me in the comment section below or on Discord, I would really appreciate it, because we're all looking for the best way to smooth out the volatility in our account while still collecting the highest amount of dividends possible. Okay, so what should you anchor your portfolio with? All right, that's the $1,000,000 question for this week. And if you need help understanding, again, how I play Cornerstone, email me for my e-guides at aikentod48@gmail.com. Again, I have e-guides on Cornerstone, how to use margin to live financially free, which here's my margin number down here. It's grown to about 240,000, but who cares? It's low interest margin. It doesn't show up on a credit check. It's lower than a mortgage rate. It's lower than credit cards. And I'm only using a fraction of my purchasing power, which is about $1 million. I'm only using a couple 100,000. And then my dividends of over 100,000 per year will pay back that margin in less than 2 years. And I'll be left with a $640,000 account value, roughly, and all these dividend-paying assets to myself afterwards, paying me dividends, paying me cash flow, monthly cash flow for life that qualify to banks that help me live financially free for life out of my account, okay? You just have to use the margin to then have that be paid down, and then you're left with the assets for life, okay? And you can live financially free out of your brokerage account that way. So I hope you liked the video. Click like or subscribe if you did, and I'll talk to you soon. Thanks.